Hi guys, this is Simon with Trade and Perform Coaching doing the trade review for Monday. Let's see, today is the 18th of August. So a couple things before we jump into it. First of all, from Friday coming into the day, we already knew that the upside had a strong bias, right? That I was not looking to come in to the short side at all. Clearly we had, so the first thing was when it takes an act of war to get the market down, you've got a strong market, number one. Number two, we knew that people were hedging against risk on Friday. They probably got squeezed at the end of the day. They clearly got squeezed all night, and they got squeezed into the day today, right? So the bias from the get-go was from the long side. Sometimes this presents a difficulty for me because the difficulty is if I don't get a decent rotation down, it is hard for me to get a fill, and that's exactly what happened today. I normally like rotations at a minimum 5 to 6 points. Hold on one second here. So you can see out of the gate, we clearly had no downside rotation or very little downside rotation, and you were pretty much forced to take the first small move down, the first 2-point rotation, to be able to capture any of this and or chase the market, and I don't chase the market. So that kind of gives you the answer there. But you got to remember, I'm not looking at trading just as a intraday, one-day activity. I'm looking at it as running my trading as a business. So therefore, I don't have to have a winning trade every day. And some days, if I can simply avoid giving any of the money back that I made on Friday, for example, on Friday, right, and I can survive it, then I will. Then that's just as satisfactory to me, right? So the goal was to attempt to take longs from positions lower, particularly this area and the area below, right, on the first rotation down, and we were unable to get any kind of rotation lower. The other thing that indicated to us that we should not take a short, right, and I was clear I would not be taking a short in this 1864.50 to 66.50 zone. We had a lack of attempt at half gap. We had obviously no attempt at gap fill, and that set up almost a potential scenario where we're getting an open drive higher. Oddly enough, in a market that's strong, we couldn't stop having open drives higher earlier in the year, and now we can't get one to save our life, right, where we get a nice zero tick reading for a trade to the upside, which is another one of my entries on alongside days. Basically, there was not a lot to fight over. 1860, 1867, 1861 to 1867. Essentially, we had a 7-point rotation here. So I want to be clear and seeing if I can't help traders out. Okay, so you have to be able to act intraday, but you have to be able to think over the course of a couple of days periods, right? And looking back here, one of the things, if we go just back up a couple days ago, we had stated that this 1824 way down here, right, was a key area. That was, I think, last Monday, right? And we rotated all the way up from there, and obviously we've hit at this point from 1824 all the way up to 1870. Now, I didn't say, sorry about that, guys, I had to take care of my dog. So what I was going to say was, what a lot of traders will anticipate, right, is they'll look at the market as a whole. Let's bring up this chart. Okay, so there's a 15-minute chart on the 8th, which is roughly, 8 or 10 days ago, just a couple of trading days ago, right? We were trading at 1900 overnight. We were trading 1891. We've gone all the way up to 1970. And what happens about right in this area is people start saying, oh, there's no way it's going to go back to the top. It has to come back and give us a test of that overnight low. Well, it never has, right, is the number one thing that I want to point out there. And it doesn't, nor does it have to. So a lot of guys got burnt just shorting up in this area. If you didn't, good job, right? Now, many of the guys that I coached did a very good job of taking these longs back to the upside, and congratulations to them. That was not an easy thing to do, but well executed, particularly off that 1924. The point that I wanted to make here is, first of all, the market doesn't necessarily have a rule. Secondly, the range can be a lot wider than most people give credit for. So let's look at this and just do some math really quick. So if you look at this, this is a move essentially from 1900 1967, 67 points, right? That means that we had the potential. It took 1, 2, 3, 4, 5, 6, 7 trading days to accomplish that, right? So that means in a week from now, right, if from the point we're trading right now, given that the average potential extension, right? So that means right now we could be trading back within a week at 1600. And I mean from where we're trading right now, right? Or we could be trading as high as 2020. Okay, both of those are, and anything in between here, this is a viable area, right, of potential destinations over a period of time. What I'm trying to say about this is don't come into the market with a preconceived notion of what the market must do or should do on a bigger time frame. Instead, if you'll take that and you'll reverse the way that you're looking at the market, right? If you reverse the way you're looking at the market and understand, look, it doesn't have to follow any rules. It doesn't have to come back and test the low. It doesn't have to come back and test the overnight low, right? And if you'll relax and instead look at the price action and let the market guide you. For example, today, someone could have been thinking quite easily, oh, we're going to push back in to get half gap, right? Half gap or gap fill. Now, the traders who took that obviously got smoked again, along with everyone who shorted the close on Friday. They all got crushed. But if you stood back from an observation standpoint, right, and look at this chart again, and see how your day would have gone a little bit differently. Think about this. Okay, first of all, you knew the market was wrong chart. Here we go. Oh no, that's wrong chart. That's tomorrow's chart. There we go. So you knew coming into the day that we had the potential of getting gap fill down here, and that this was the white zone, which is usually the first location I look to take a trade, right? Additionally, if you look for the proper rotation size, right? So if we opened at 1962 and I look at 10 points lower, that would give me 1952. So this location became very attractive to me to try to garner a trade back to the upside, right? And at the minimum, right, a rotation from 66, if we could have rotated down into 58, that also would have qualified as a valid push back to the upside. As it was, we couldn't get any of those things. But here's the deal. You didn't lose any money because you were waiting for your trade location, right? Secondly, because we were able to get a good read and realize that the market, with an inability to get half gap or gap fill, was strong, you did not push or test a short. Even if you took a short in the zone, the 25-minute trading rule, 5, 10, 15, 20, 25 minutes, right, should have gotten you out of this trade with little to no damage, right? And then you really didn't miss anything. Really, the bulk of the move was right here. From 60 to 66, it was a 6-point move, and you had to pretty much nail it perfectly in order to get it. The rest of the day was just chop city. Okay, traders who try to make any money in this area pretty much just got their heads handed to them. There was nothing to be done here. So if you've lost money on the way up and you've gotten frustrated, first of all, take your breath. B, I would like to encourage people to study the rotation size of the market and put the size of the rotation in your favor. Wait for it to come down. Wait for it to make a nice fat rotation lower, and then when everyone else is panicked and trying to get out, you step in, of course, using proper stops behind, right? And at that point, you've put everyone who's gotten greedy up here and gotten fearful down here, you put the power of that fear on your side of trading. You get a 2-point rotation up, you take your 2 points off, and you leave a scale for potential trades back up and into the top of the range, okay? So that's number one. Secondly, we're clearly not in a bear market. There's no damage on NQ. I will continue to look for trades from rotations lower for a move back to the upside, and I'll be fairly hesitant to press or push short trades for now because the market simply is not weak in any way, shape, or form. I want to go look at NQ really quick so we'll see a copy of the same picture, right? Okay, again, coming into today on the NQ, very little counter rotation lower. Usually we can get at least 10 points. We couldn't even garner 10 points to the downside this morning, right? NQ has been strong all night. It was strong on Friday, as mentioned in the live market preview. And coming in, we knew we didn't want to take any shorts in NQ. Now, you could have said, well, gee, Simon, I could have shorted here and covered here for a pretty nice trade. And that's true. That's a whole 6 points, right? But when you consider that the normal rotation is much larger on NQ, why mess with the time of screwing with this when you could have gotten caught in a push straight up, right? And that's very possible, right? Look what happened. Okay, so with that same mentality, right? Look at what happened. By the way, this wasn't here. I was highlighting that this was consolidating for a possible push higher, and I still think that possible push higher can come overnight. Again, if we look, we had Friday's high, inability to get below that. Globex low, we had Globex low was down here. Friday's high is right here. Complete inability to make any attempt to get to either of these 2 points, much less gap fill. Okay, market was strong out of the gate. You knew not to take the shorts. Secondly, on the rotations up, look at the counter rotations. Even if you got the proper rotation up, you really had to fight the market to get just squeeze a couple of points off of this. The market kind of died out. This is typical August trading. So when you put NQ and you combine it with ES, all you have to do to gain consistency and not have your account go through these boom bust cycles is read the tea leaves, right? Let the market guide you. Let the market show you that there's volatility. So the other thing that I did that really helped me this morning and helped the guys in the room is that the first hour has been very difficult. It's been a whipsaw. So I've simply adjusted my trade plan to take fewer trades in the first hour and stretch them out to the second hour. Now I got to tell you, the area I wanted to take a short that I've highlighted today on ES, we never got there. Okay, was right here, marked in strong resistance. 1972 and a quarter, 1975 and a quarter was the first place I was looking for rotation. That would have been a rotation up from 1961 approximately to 1972, 11 to 13 points. I should have easily been able to garner, or hopefully would have been able to garner, a 2-point rotation. That's where I wanted to take risks. The market didn't take it up there. And I guess the takeaway that I want to have from this is there was nothing to do here, and we did nothing. You got to give yourself an A on your scorecard when you do that, because the only way to have captured this would have been to take a small rotation down for move to the upside. And on most days, considering that most retail traders, at least that I've spoken with, use a 1 to 2 point stop max, they choke on 4-point stops, right? So taking a 2-point rotation lower and trying to make that stick is a very low odds proposition. Also consider 70% of all retail futures traders fail, dramatically fail, right? You have to do something to switch those odds into your favor. And the only way I know of doing that is by getting those larger rotations down to where you know institutions will be responding at those predetermined support resistance zones. So at any rate, I've gone on longer than I wanted to. The entire point of this was the call was for a move to the upside. We did not get a dip down to garner that push back up. Volatility will return to the market and we will get trading opportunities. We will continue to push for moves lower, for rotations back higher in the late morning to afternoon. We will not be as aggressive, or at least I will not be as aggressive on the short side for the days to come until I see a clear change in behavior in the market. Okay, so last piece that I wanted to leave y'all with. In the morning, I post this in the live market trading room, and what this is supposed to do and what it does. I've just started it, but it basically shows in which areas I had the highest odds of gaining a counter rotation, right? This is average, this is a bit higher, and this is the highest. And same thing from these areas here, where I can get pushes down from, or the other way to look at this is where the market will get exhausted and run out of steam. But what this does is it moves you out, right, hopefully from the open, from where all the chop is occurring, and moves you into clear territory to take those trades back to the downside, right, or back the other way, I should say more appropriately. Now, since the focus right now is on upside trades, this area becomes more of our focus than this area does, right? And instead, we can flip around, and if we can get location, we weren't able to do so today, but if we can get location in any of these areas in the morning, we can use these locations on top for potential upside targets. Okay, and I'll continue to post this trade. Hopefully this comes in very handy, and it makes looking at the zones much easier. The other thing that this is supposed to do, right, is, guys, when we're up in these areas, it's supposed to help you think, hey, I'm in an extreme location. I don't want to get bullish at the top, and I don't want to get bearish at the bottom, because odds are what the market does the majority of the time is push back to the middle. So hopefully for the subscribers to the live market preview, this will be some additional help. I want to look at one last thing here while we're all together this evening, and that's the volume profile. Okay, when you look at the volume profile for ES, let's get rid of all the pretty colors. Okay, so when we look at this, the first thing that I notice on ES is that we are very close to new high. Okay, so it wouldn't take much. This would be a jump of less than this point, less than 20 points, which is easily doable intraday, and we will be at new highs. Secondly, and I've emphasized this again and again and again, when the gold market moved to the downside, I'm not a permanent bull. I like trading both sides of the market, but when one side is showing more strength than the other, it would be quite easy to trade back above, and then if we closed back below, that would certainly create a situation where we could get a push to the other end of the range. Right now we have a fantastic range. The bottom end of this range right now is sitting between 1905 and 1910. The top end of the range, which we're at, is somewhere between 1970 and 1985. This is the top end of the range now. We may break that range, but we haven't done so yet. The other thing that's important to keep in mind is generally, not always, but generally when we break the top of the range, we'll tend to gap above, not open. Often if we open below, we'll end up as having failed range extension and closing back below and making a push back in for either a later attempt at a clear break off of a gap or a move back in to the bottom end of the range. Only the future will tell. I have no idea of knowing which one it's going to do, and I'll let the tea leaves in the morning kind of set me up for that trade, along with the proper rotation size, right, and the correct velocity. That's the last thing I wanted to touch on, velocity. Okay, so most retail traders come in and they try to trade every kind of market, fast market, slow market, choppy market, whippy market. And look, we all have different personalities, and those personality, you have to match your personality to your trade. Now, I happen to suck at slow, grindy markets. I have no problem admitting it. It's part of my trade plan that I suck at it. I take extra precautions when the market is slow to make sure I don't overtrade nor get frustrated, okay? Some people, on the other hand, with fast markets are fantastic. That's me. I'm good with fast markets. I like the illiquidity because it creates trade dislocation through the course of the day. So in that, and in saying that, right, you have to be able to match where you're comfortable with what the market's doing. If you try to be a jack of all trades, right, you probably won't become an expert at any one trade, and it becomes very difficult over time to stack those chips and to stack those profits and become consistent. Okay, and so the last piece that I want to remind everyone, A, be nice to yourself. Also, it's August, guys. Give yourselves a little bit of slack. The market is never easy in August. It's generally my lowest performing month. But this month's actually been pretty good because we've caught a couple of very nice trades, both high and low, over the last couple of weeks. So I hope this helped out. My name is Simon. I'm with Trade and Perform Coaching. If you're struggling as a trader, if you're going through boom-bust cycles, stop, slow down, get a written trade plan, get a trading journal, work on that trading journal on a daily basis, right? And then identify what your worst markets are and what your best markets are, and then go back to determining whether or not you have a real edge or not, and if you have rules to exploit that edge. I know that I have a real edge. I know I have rules to exploit that edge, and I know all I have to do is be patient, wait for the market to come to me in order to get paid. So anyways, have a great night. If anyone would like a trial to the live market preview, you're welcome to email me at trade and perform, TRADEN as in Nancy, perform at gmail.com, or you can hit me on StockTwits or on Twitter. I hope everyone had a wonderful day. We'll talk to you soon.